Welcome to Dollars and Cents, Creating Your Fulfilled Life with Nicole Romito from Private Vista. In this podcast, we draw from years of experience as well as guest specialists to help you create the life you imagine. Join us in this journey as we enlighten and empower you to align your lifestyle to help you achieve your goals with a clear picture of your future. Now, let's get to the show.
Hello and welcome to the Dollars and Cents podcast with your host, Nicole Romito. Nicole, really good to be with you again. How are you?
I'm doing fantastic, Bill. As always, love being in studio with you. How's life treating you thus far?
That's great. I do always enjoy being in studio with you as well. And I'm not just saying that. I genuinely mean it because your conversations usually have a lot of information in them. It's a good listen. It's a worthwhile listen, as a matter of fact. What do you got in store for us? I understand this is like a two-part series today.
It is. It is. We've done a couple of those now and they've gone so well. We're continuing that theme. I think as you and our listeners know, I always get a little extra jazzed when I have one of my fabulous colleagues in studio with us, and that's the case today. So with me is my partner, Stephanie Nanney. Welcome.
Thank you so much for having me. I'm thrilled to be here.
Absolutely. We're glad to have you back. For our longtime listeners, you may recall that Stephanie was on an episode with another colleague, Delaney, and they were talking about what a great career wealth management is for women. And in particular, as Stephanie is raising her family and still working full-time outside the home. So we are glad to have you back.
Thank you.
And today I know we are going to talk about in our two-part series. So for our listeners, Stephanie leads our group that focuses on medical professionals, attorneys, and accountants. So the way we look at it is kind of other professionals, and all of them do need a financial advisor. So Stephanie's going to be sharing with us, this one's going to be directed towards medical professionals. And we're going to talk today about how are they paid when you are starting out or maybe even mid-career. There's different ways to affiliate, and we'll get into detail on that. And then last, but certainly not least, like many of the clients we work with, how you're paid or compensated is not straightforward.
Wonderful.
Yes. So as Bill said, it's going to be a lot packed into our episode. So everyone get out your notepads, and remember, you can always listen to this episode more than once. So before we start getting into our topic at hand, I do want to share a brief bio of you, Stephanie. Stephanie's been with Private Vista for about 18 years. As I mentioned, she is also a partner and lead advisor. She graduated from Lehigh University. And as all of our advisors are, she, of course, has her certified financial planner designation. I already shared with the type of clients that you generally work with. Why don't you, when you're not busy helping run the firm or help our clients, why don't you share a little bit about what you and James and your lovely daughters enjoy doing?
Thank you, Nicole. Yes, my husband, James, and I, our daughters are Reagan and Mackenzie. We love to be traveling with them in times when we are not working outside the home. We're really active with the two of them in their sports and activities as well. So the four of us just have a great time together with our extended families as well. You know, my parents, James's parents, both of us have sisters as well, and a niece and a nephew. So we have a great time as family gatherings, as well as just traveling the world as the four of us. So it's great fun to raise the girls as they get older and older, and we can do so much together now.
Yes, absolutely. And I will tell our listeners, they are one active family. If you were ever out skiing in Colorado, chances are you will come across the Nanney clan on the mountain.
Yes, which I'm now the worst skier in the family. Both the girls can surpass me at 8 and 12 years old, and my husband's been doing it his whole life.
Yeah.
So,
well, I think that's a parenting win.
Yes.
So, well, great. Well, thanks for sharing a little bit about you personally. Why don't we kind of get into our topic at hand? And I think a good starting place is to talk about how are medical professionals paid?
great question. I think it's really important to understand the difference between working for a hospital or a large group, or working and owning your own practice, or potentially being in private practice on a path to ownership, or a path to working for an independent owner or sticking with independent owner. The reason that those are important and different are because we really view them as what can you control as an individual in terms of growing your own wealth, and what can't you control. So in the example of working for a hospital or a large group, much of the time you'll be paid a salary. And then from there, what is the structure that gets you as a medical professional paid above and beyond that salary? In kind of the corporate world, we think about a lot of times bonuses, right? That word comes up all the time. What am I getting above my salary in terms of a bonus? Then, well, there's a different podcast that Nicole and Matt Parenti did a wonderful job on, executive comp. Very different in the medical professional world. In the medical professional world, a lot of times you are paid on production, and that can be tied to something called an RVU, a relative value unit. So what that simply means is if you're paid a base salary and part of your structure is based on your RVUs, if you're a productive medical professional, you're going to be paid more. In addition to the other way that medical professionals think about it is pick up extra shifts depending on your specialty. So you have a way to control your own compensation from that way, but not control it from base with your RVU, because that's put in your contract, how much you'll be paid there. The other path that you might go down is then the path to ownership or owning your own medical practice, where you control the profitability of the practice to some extent, and how much are you able to earn as an owner. So those are the first two things that are really important. Where do you work?
Okay. And that sounds like not only from a monetary compensation, but I'm also kind of reading between the lines on maybe like how much time you're spending at work. Am I understanding that correctly?
You're exactly correct. And I think that's something we're going to talk about a little bit in this episode, but also in our second part, as it relates to what I call the self-solving medical professional. And what that simply means is, oh, I felt like taking or doing something as a financial goal, I will just self-solve and work more hours.
Got it. So if I need to earn X or save Y, then I know how many hours or shifts I need to do to be able to net that amount of money.
Exactly.
Okay.
That can be a dangerous path if you're not planning ahead, because many of us can work many, many hours above and beyond what's standard or normal. But when we talk about challenges and with medical professionals, is much of the time a very, very stressful job. And
getting more so every day.
Very difficult. And on top of that is, yes, you can say you can work 7 days a week for a long time, but I think we're coming to a place where breaks and mental health are really, really important.
Right.
And now hopefully more often discussed.
Absolutely. And I know we've seen it where even in our profession, we'll have certain times of the year where we're busier and maybe working a lot more just because it's a tax deadline or certain big events going on in our clients' lives. But I know, as you know, as you and I continue every year, we get a year older, or like you and I like to say, a year better. But really what you find is you may still say, yeah, I want to do it, but like physically or mentally, it just becomes harder and harder. And at some point you can't.
Exactly. And so kind of continuing on this conversation about
Right.
how are medical professionals paid, for those doctors and dentists and other professionals that are super productive, meaning the way that they're see a certain number of patients in an hour or so forth, the relative value units, if they think about being able to do their own practice or control their own destiny, they probably can get more of the profit to drop to their own pocket or their own bottom line. Whereas when it's controlled by a hospital or a big group, you get capped to a certain point. And so those are really the big themes that we want to think about when you're deciding on your lifestyle. What risks do you want to take and what do you want in your control? We have to start there with clients. What are the pros and cons?
Absolutely. Right. Because we know that with every choice or every decision, there's pros and cons.
Exactly.
So when you mentioned that there might be, if you're with a hospital or perhaps a very large medical group, that there might be a cap. So you might say, well, I'm going to earn, I'm just making this up, 100 RVUs this week. you could do that, but you might only get compensated for 80.
Well, it's more a runway room of, are they going to let you continue to work more shifts or more hours? And then, like you said, every single contract might be written differently.
And that was okay. That was going to be my next question.
Yeah.
So great minds. So it would be outlined in your contract
Exactly.
with the hospital or the group.
Exactly. So they might cap you, they may not. And then that's again that you can envision, if you're not capped, how much you could earn. And then you're running out of almost daylight per se, right? How often are you
Right.
willing to work? And so then it's more a matter of that balancing act of what's your base and how much is based on your production. So the contract does dictate all of those questions and concerns, as well as other pieces of compensation, which we can touch on in just a minute.
Right. Yeah. I was gonna say before we go there, because there's
Yeah.
a lot to unpack here.
Mhm.
So when you're seeing these contracts or advising your clients who are medical professionals, what are some of the questions you ask them or things that you help them evaluate both sides of the coin?
Yeah.
Because I'm wondering, can you take a lower base salary and maybe you're saying, I'm gonna work my hiney off and get more upside there?
Yeah.
Do you want to negotiate for a higher like what are some of the things you're talking about or for our listeners to think about who are at this crossroads?
It's a great question, and it does take professional conversations with not just us as your financial planners, but also accountants and attorneys,
Right.
because a few different reasons. So obviously the first being, Nicole, as you mentioned, knowing our clients and continuing to get to know them every day. What are the goals and the targets? So a lot
Okay.
of this is, if it's someone who tells us how much they want to work, then we can think about, is the salary with a small production appropriate?
Mhm.
Or the other way, do you want flexibility because you want to work a lot more or get paid a lot more in production? To some extent, though, depending on the size of the group, you may have negotiating room or you may not, unless you
Sure.
go over to a private practice. So that's
Okay.
where it's really more about knowing the goals of the client, I think, is step one.
Got it.
And then the other thing we're looking for in that contract is certainly protection. So protections on, how much is the large hospital group covering you on your malpractice? How much are they giving you in terms of other benefits? So do those benefits include a life insurance benefit, a disability benefit, a retirement plan benefit, any additional deferred compensation benefits? So all of those are so important to touch on when you read those contracts that do require a team of professionals to look at them. So it really does depend on what the client's goals are in terms of what they want to earn. And so you're exactly right, Nicole. Some people want to be tied to, the more that I work, this can keep going up and up and up. The other way to think about it, though, is kind of really thinking about maintaining a set fixed salary. That's
Okay.
certainly an option as well.
Right. Absolutely.
Yeah.
So that's kind of one step. And I like it and I find it interesting and just want to highlight it for our listeners is, Stephanie pointed out, you're not starting with the contract, the hospital, or the group. She is starting with you as the individual and looking at your whole picture. What are you trying to do? Probably where are you in your life cycle? Because I know one of the things we're going to talk about is, at least with what you've shared with me, is this isn't a once in a lifetime decision point.
Mhm.
You may have decided something, in your late 20s, early 30s, when you're finally done with your education
Mhm.
and getting to use it in real life and start to get paid. But then, as we've seen, just like all our other clients, as you go through the life cycle, we already talked about energy and stamina, but then maybe you're starting a family, maybe you need to care for parents or things like that. And there's also been a lot of change in the medical landscape. I know here in the Chicagoland area, and I don't think it's just specific to us, hospitals are gobbling up the private practices. And I don't know if you want to go here now, but at some point, I know we want to kind of talk about the trend you've seen,
Yeah.
even just in your 18-year
Mhm.
career,
Yeah.
where it's, I don't want to say zig and zag, but we're seeing almost you're like, oh gosh, this is kind of where we were when I joined the firm.
Yeah.
So,
I mean, you're exactly correct, Nicole. Very much more recently, it's a perfect segue talking about what's the difference of owning your own practice or being on a
Perfect.
path to partnership.
I like that.
Yeah.
Mhm.
And that's exactly correct, is there have been, I'm going to say over the last decade, that's anecdotally, but also seeing trends that aren't necessarily our own clients
Okay.
got away from private practices. And now I'm seeing it come back again. I'm getting more and more clients inquiries and outside inquiries asking me, how would you set up a practice? How does this work? How does that operate? And so touching on that is kind of the why. Why are people thinking about that again?
Exactly.
And a piece of it has to do with, many challenges that medical professionals have are coming out of schooling with a tremendous amount of debt.
Right.
Much of the time, and figuring out then when you have that debt, the paycheck that can be steady from a hospital group without taking any entrepreneurial or business risk. That's a piece of it.
Is all potentially additional debt, right? If you're needing to
Exactly.
buy in, or
Exactly.
you think you're going to start your own practice, equipment, leases, built, right?
Exactly. So now we're starting to see a little bit, the inquiries are coming from people in their mid to late 40s or so. That's a big, we'll say a wide range of that age group. Having been in there for 10 years, likely have paid down quite a bit of debt and maybe done some savings, and then also gotten into their own personal residence and purchased that as well.
Right.
So that's allowing them to think about, is this what I want for the next phase of my life, Nicole? So the perfect segue is when people think about and ask those questions, what questions should they be asking?
Yes.
What does this look like for them? And you brought up a couple of those things as purchases and so forth. But before we even go there, back to the why. Why would this be something you want to consider? The short answer that you want to get to over the long term is you can control more of your likely income and savings, because there is not a mothership or an overlay that flows the income down to you. Now, obviously, you need a lot of professional advisors in terms of accountant, attorneys, insurance, all those things to make sure that you're well set up, well structured, and profitable.
Right.
And so that's what, it's a very large hurdle, right? You have to have the
It
medical
is.
professionals to get there, and obviously having knowing that you're taking on some level of risk out of the gate to make sure you have patients that are coming in the door. Let's assume you get over those hurdles and you start a practice that becomes profitable.
Okay.
At that point in time, when the profit drops to the bottom line of the business owners, this is the control that then you as the business owner decide what to do with the profit. Are you keeping the practice for expansion? Are you saving it personally? Are you saving it in retirement plans personally? And this is a big one where I want to talk some examples about how our listeners can understand kind of a black and white difference of being employed versus not employed.
Great.
So I'll pause there unless you want me to just keep on going.
No, I think that's a great way to do it. So if we're looking at it, we're going to compare and contrast. I think the key word that I noted was the control.
Mm-hmm.
And I feel like that's very important to many people, especially in today's world where we feel like we're having less and less control. And so I think that's key, but you're right. With that, there's going to be pros and cons. So if we're continuing down the path of we decided to start our own practice, and generally speaking, is it like one person doing it, or do you generally try to get a few peers or physicians or medical professionals together? Any thoughts on that?
Yeah, it's a great question. Generally speaking, both and all. So there is certainly sole practitioners out there. More so we see sole practitioners then have kind of the next generation that they're getting ready to bring up over time.
Oh, so it's like part of a succession of the practice.
Exactly. And if it's a larger group, 4 or 5 or so practitioners, there's a spread in age as to when some might retire and then continue to bring on new physicians. And that's really one of those trends you were talking about earlier, that in the last probably 7 years, it was harder to find the next generation to come in. I have quite a few practices that right now have that next generation that's showing up to the door and hopes that they will become on that path to partnership.
Right.
So,
okay.
So kind of as an associate today, or meaning they're a doctor, they're not a partner, but they're certainly a doctor with the practice. That's been 5 years ago, I really saw very few of those doctors and now we're seeing quite a few getting ready for succession planning.
And is that because you were talking about kind of the trend going back to what you were seeing maybe 10 years ago, were those younger medical professionals or doctors, they were going to the hospitals for the reasons you've already outlined. And now we're seeing the next generation is choosing to say, let's look at the private practice.
Yeah, I think it's some of that. And so, but it seems to be a wide age range, right? So the ones going to private practice are all the way from right out of residency, or even a couple coming from the hospitals now. So they're
Sure.
10 years into their career. I'm seeing both right now. So
Interesting.
hard to say why exactly,
Yeah,
but
well, yeah, exactly. I think certainly the healthcare industry is very fluid.
right, exactly,
At least here in the US.
Right.
So, yeah.
Hey, pardon the interruption. I know you are listening to Dollars and Cents, Creating Your Fulfilled Life with Nicole Romito, and we're happy you're here. If you have any questions, please head over to myprivatevista.com or the show notes to find out how to reach us. We'd love to hear from you.
So, okay, so we're seeing that. Where do you want to kind of go next then? Whether you're coming out of your residency or you're transitioning out of the hospital model, if you will.
So I think one of the first places you want to contrast is what's in your control. What benefits are part of what you can control differently than when you're an employed medical professional?
Okay.
One of the first ones is the retirement plan. And where I want to start that is when you're an employed medical professional, you have the way that we talked about you're paid, your base salary, maybe you're on an RVU or a different production schedule or even a bonus schedule. And then likely the hospital or large group, either you saved your own money into your retirement plan. Everybody has the ability to defer their own compensation up to $23,500 this year or $30,000 if you're 50 or older.
Okay.
Above and beyond that, you likely received either a match of 3% of your pay or a give of 3 or 4 or 5% of your pay into your retirement account. And it stops there. That's all that's in your control, which again, it's not in your control. They're telling you what they're giving.
That's all that's available
Exactly.
to you.
Let's call it 10 to 15 grand that was put into the plan for you.
Okay.
That's above and beyond your own deferral that you're saving as well.
Okay.
On the side of the private practice, what we also help our clients do is design the retirement plan so that the owner physician can do that deferral. So let's pretend we have an owner physician who is over 50 years old. They're deferring $30,000.
Still quite young.
Yes, very young, but they happen to be over 50. And they're deferring $30,000 of their own pay out of the practice. When we design a retirement plan for a small practice or a mid-sized practice, the owners can then defer an additional put away $46,000 of what we call employer money, or again, the business's profit gets deferred from tax. And when an owner does that, then they may need to give the employees 3 or 5%. So now this owner has put $46,000 for themselves, whereas when they were employed, they only did $10,000.
Got it. And that's all pre-tax.
That's all pre-tax. And so that's a spread of $30,000 that, yes, maybe they have to give some to their employees, but everybody loves paying Uncle Sam last. And that's really what's helping drive this. Plus, the added benefit is the long-term compounding of the asset they saved on that big spread of close to $30,000+ that they could put away personally now when they couldn't do that when they were employed. So this is just another piece of compensation. So again, if you are changing practices, leaving a hospital, whatever it might be, when you're looking at your contract, if you're becoming an owner, what's on the path to get to those kind of levels of putting away, or even in private practice, what's going into the retirement plan for you versus what you were getting if you were employed for a big group or a hospital. So I think those are one really important contrast that we'll see.
Yeah, absolutely. I mean, that's a huge benefit where, especially as I'm thinking too about the physicians or the medical professionals who are transitioning, maybe they're in their 40s, so they're leaving the hospital, they're transitioning to private practice. Medical school debt may be all gone, or certainly probably a good chunk of it's been eliminated. And given that point in your life, you probably are having some free cash flow. And then since it's pre-tax, every dollar you put in is not taking a dollar out of the checkbook because you're saving on taxes along the way. And then I do have to do a plug for our listeners. Stephanie's, one of her favorite sayings that we all know, her mantra is that the power of compounding, I believe, is it the eighth wonder of the world?
Exactly.
So I got to give you your plug on that. So It really is. If you're in your 40s or even 50 and you think I'm going to work for 15 more years, that 30,000 every year, depending on how you're investing reasonably, I won't even quote any type of possible returns, but it could substantially
Yeah.
increase, and it's meaningful.
Exactly. And then Nicole, I want to take a step further. So now you're in your private practice and you're doing quite a bit of saving that way.
Great. I was wondering if you wanted to go to the next
Yeah.
step.
And
Great.
now let's say we have additional profitability, right? Your practice is growing and now you're in your mid 50s, as Nicole just mentioned. The step beyond that, and this is where this gets very fun and very cool for how much you might be able to save in private practice, is we love to layer on for a lot of our clients something called a cash balance plan. And this could be its own whole episode, which we won't get into today.
Right. Which we do have to put that on the list.
Right.
I agree. Because our listeners, well, you might be like, wow, Stephanie and Nicole are kind of geeking out about this. This is what they think is cool. But when you really see the power of the amount of money you can save pre-tax,
Mhm.
and again, depending on which plan or how it's designed at what we call a low cost, and we look at not only the cost of running the plan, but a lot of times you do need to make some contributions, as Stephanie referenced, to all the employees in the practice. But again, that doesn't have to be dollar for dollar.
Exactly.
So
And-
I just wanted to interject, but
Yeah.
please continue going on. If they've done that, the practice is doing well, they're getting closer to financial independence. So they're like, what else can we do, Stephanie, to
Exactly.
save?
Someone might be introduced to us to say, this practice is doing well enough. The owner is 60 and maybe they have a succession plan coming up, but it's being profitable of a couple $100,000 a year. And Nicole, like you mentioned, you have at that point, likely there is no more medical school debt. Some of the kids might be out of the house already. And to save tax on your profitability of the practice, when we put a cash balance plan in place, you can save hundreds of thousands of dollars as an owner to a cash balance plan. And yes, you need to give your employees another couple of % of their pay. But when I say hundreds of thousands of dollars of pre-tax, if you're in a 30% tax bracket and you're putting away $160,000, you can save $48,000 of tax and continue to add to that power of compounding.
Right.
Now, yes, again, as Nicole mentioned, you might have to use some of that 48 of savings to give this to the employees. So it depends on the size of your practice and how many owners and how many employees you have. But these are really tools that are available as an owner group that we really love to explore with our clients to help save on taxes and plan for retirement at the same time. I hate to use the word cool again, but I don't have a better verb. Adjective.
Right. Yeah. No, it is. And I think the key takeaway for our listeners is there's a lot of flexibility that comes into designing these plans. So many people might start with, well, what are my investment options? Or, oh, I'm saving taxes. But one of the big benefits of being a business owner, which, you're owning, either you own the practice or you own a portion of it or a piece of it, is understanding based on the demographics of your practice, of all the employees, when they see how much money they can save pre-tax. And it's not a one and done. It can be year after year. So that's the one thing I wanted to highlight and emphasize is it's, in our opinion, it's all about the design.
It is. And obviously, certainly things that we would touch on if anyone wants to have a conversation about this is,
Right.
The IRS says these need to be permanent, but permanency is 3+ years. So how do we think that through? And can you support that kind of level of cash flow? And when you can, it really makes a ton of sense for a lot of people. So it's been very fun to watch those be implemented.
I bet.
And see those clients to have, either save on the tax and have the financial independence or the financial freedom ability, even if they still love what they're doing and want to continue to work. That's an even stronger case for it because, again, none of us like to pay taxes first. We'd like to lower that bill.
Right. Absolutely. So I think we could sit here and talk about this all day. We've already teed up a future episode where I think we should do a deeper dive just on all things on what we call qualified plans. I think listeners, you might think of it more in terms of retirement plans. I think we'll just leave it at there's so much more than just your straightforward 401k that most of us are familiar with.
Yeah.
So there's that. One thing you mentioned, and I think before we wrap up here, is if you are on the path of working for a hospital or a very large medical group, and either that's the path you've decided, like you said, you've sat down with your advisor and you're like, nope, that's the one that makes sense for me, or that's just where you are right now. We talked about the 401k or the retirement plan might be a 401k, might be a 403b. Do you want to talk at all about like the deferred comp piece?
Sure.
Because that is a way where the employers often will offer that as an additional tax play.
Right. So what deferred comp generally means, and there are a few different types of plans, so it depends on each situation again.
Good point. Good point.
But generally what that means is it's designed for what are considered highly comped. So a lot of hospitals and large groups, really that's the medical professional themselves.
Okay.
Not necessarily your admin team or behind the scenes teams. So what that simply means is, as Nicole mentioned, another way to save pre-tax. So it's an additional deferral. There's no catch up to the 30 grand. It's the 23,500. There are a few different nuances, which is mainly associated to how the distribution occurs on the way out. So when we mean is when you retire, how much of that is taxed immediately. There's no deferring that all the way through your retirement time period, like in a traditional 401k or 403b. You would get taxed very quickly over 5 years or all in one lump sum.
Right.
So working with your financial planners to figure out if that plan makes sense to you is really why we want to have a conversation about it. Much of time, the other comment is deferred comp can continue to be an actual asset of the hospital or the large group. It's not separated into its own trust and not touchable like a 401k or a 403b.
Right.
So again, the solvency of your group and hospital is an important conversation we have with clients as well. The last thing I'll say in this, where it gets very important to have a conversation, is some hospitals will do your matching, where again, we never like to give up free money to the deferred comp and not the 401k and the 403b. So we do need to balance both of those plans to understand where is the best way to save money, save taxes, and be very thoughtful about how you save. So I think that's a lot about my little segue into what I think, Nicole, we're going to talk about episode 2 is then what is different about the rest of the planning for medical professionals in terms of how you're thinking about your short, mid, and long-term goals and the longevity of your life. So this is all a little bit of blocking and tackling of today.
Right.
And then what happens when you do save all those dollars we talked about? What's different for a medical professional than maybe someone else who's getting ready for their own financial planning?
Yes. Okay, great. And I think that's a great place for us to kind of wrap up this episode. So we're going to do that. So thank you.
Thank you.
And then we will, I think as our longtime listeners know, I generally ask my guests if you could live anywhere in the world, but why don't we kind of in a way to entice them to listen to the next episode as well? We'll have Stephanie answer that at the end of episode 2.
Okay.
So we're going to take a break now before we do start episode 2. And we'll look forward to everyone rejoining us as we continue the conversation.
And thank you for having me for this episode.
No, this is great. And I can't wait for episode 2. And I would imagine that the medical professionals who are listening to this, ladies, are going to be, equally as excited. Plus, we'll find out where Stephanie would live if she had no constraints, as a matter of fact. Nicole, for those who are listening to the podcast for the first time and don't know how to get a hold of you, how do people reach out and get a hold of you or Stephanie? They want to have a
Yeah,
conversation.
absolutely. So this one's going to be easy since obviously we work at the same firm. So I'll answer for both of us. And there's 2 ways. One, you can certainly call us at 312-831-4370. And our receptionist can direct you either to Stephanie or I. I would suggest if you are a medical professional and really want to talk about your specific situation, Stephanie's going to be the way to go. So please ask to be connected with her. You can also go out to our website at myprivatevista.com. On the homepage, there'll be a contact us button. You can fill out your information there. Again, reference this episode and ask to be connected with Stephanie. And I do know that she will follow up with you in short order in either way.
Fantastic. The other thing you can do if you're not a subscriber already is hit the subscribe button, hit that follow button. That way, when episode 2 drops, you'll be notified and you won't miss it, as a matter of fact. And if you like this podcast, I would encourage you to tell people about it and share it with other folks and let them know that you find this interesting and you find it useful. Word of mouth promotion is always a welcome thing, and we thank you for that. Until the next episode, I'm Bill Tucker on behalf of Nicole Romito and everybody at My Private Vista. Thank you for taking the time to listen today. And remember, you can go out today and make today a great day or not. It's a choice. Thanks so much for listening. Until next time.
Thank you for listening to the Dollars and Cents Creating Your Fulfilled Life with Nicole Romito, sponsored by Private Vista. Visit our website at www.myprivatevista.com or give us a call at 312-831-4370. And don't forget to click the follow button to be notified when new episodes become available. Private Vista is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Advisory services are offered through Hightower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is neither indicative nor a guarantee of future results. The investment opportunities referenced herein may not be suitable for all investors. All data or other information referenced herein is from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other data or information contained in this presentation is provided as general market commentary and does not constitute investment advice. Private Vista and Hightower Advisors, LLC, or any of its affiliates make no representations or warranties expressed or implied as to the accuracy or completeness of the information or for statements or errors or omissions, or results obtained from the use of this information. Private Vista and Hightower Advisors, LLC assume no liability for action made or taken in reliance on or relating in any way to this information. The information is provided as of the date referenced. Such data and other information are subject to changes without notice. This was created for informational purposes only. The opinions expressed herein are solely those of the authors and do not represent those of Hightower Advisors, LLC, or any of its affiliates.